Hey guys, good morning. This is Chris here in Hawaii with the London close. Thanks for being patient. We're a little late here. It's 5:19 p.m. London time. I moved up here into a cottage here up in the mountains of Oahu, and power was out. So I was able to get on my phone a little bit, but the signal is really horrible. So I wasn't able to go live on that. So power just went on a couple minutes ago. So we'll kind of talk about a trade we took with a really small risk and a high reward. Just get stopped out on that, and then we'll take a look and see if there's anything else going on right now. Um, you know, uh, Taking a look at the heat map, it's kind of a mixed bag today. The dollar is the strongest right now, but there's no fundamental reason behind it. Canadian dollar is being bought up. Kiwi Aussie mix. It's not really a commodities day. Dollar, like I said, being bought up, but not really substantially. Euros mixed, pounds mixed. Swiss franc seems like it's the only one that's being sold off. And the yen is mixed as well. So that's kind of the picture that we have going on. I believe it's a bank holiday because I didn't get the Scotiabank report. But there is a really cool report that we carry. If you go to your News Squawk link on our Bettertradr desktop or the web, it gives you the live results here, but it also gives you a London close analysis here. So ISM manufacturing survey rose more than expected today to 54.2 to 52.6. So I think that is what is causing the dollar rise. Employment rose. There's a lot of worry about the NFP this week with the employment data. We'll see kind of what happens here, but yeah, check out that News Squawk report that we carry because it does have a lot of good information. Another piece of news earlier today, EU is willing to break the deadlock in Brexit talks with the UK by softening its demand that Britain should abide by EU rules on state aid in the future. So that's a positive Brexit piece there. So you can see nothing really substantially moving the markets today. If we kind of look at where the markets are right now, the Dow is up, S&P's up, Nasdaq's up, VIX is up slightly too, so it's a little bit volatile. Oil up 78 cents, gold is down 320, just below that 2,000 mark. So that's what we have going on now. Looking at, like I said, the markets, you would think the euro would be bounced up here with the rise in sentiment, but the euro has gone so high so fast. I think there's still a little tweaking to be done, but you can see it's really stopped here at the 50 level. So I know I got in here right around this level, and I said to break it, this would stop us out. So we got out of that, but I'd feel comfortable right here at this level as well, because you can see it's a former support level also. So if you got stopped out on that small reward to risk, you can still get in on this thing and I think make some money. You can see volumes kind of built in right here on a reverse, but it's not substantial. So I think this thing could go down a little further. I would anticipate some price driving lower until NFP, and then I think it'll spike up. But that's my opinion. It's a little bit contrarian, but for me, if this thing breaks this little consolidation here over the last 25, 30 minutes, I'm not interested anymore if it goes above this. So here's a cool little tip for you that one of my mentors showed me. So this is let me draw it. On Fibonacci, I don't use Fibonacci, but I do use a a cool little process on this. So everyone knows retracement 38.2, 50, 61.8. The 78.6 is an interesting level. So if price gets to that 78.6, there is a higher than likely chance that it's going to continue up. Once it hits this, it's going north most of the time. So this is a cool little technique for you to kind of judge your levels. So when you look at volume and you think, oh, okay, well maybe I should get on at this top. If this thing gets up to here, it's going to go higher. So just keep that in mind when you're looking. That's why for me it's at the 61.8. If it's going to blast above here, I'm not really interested, because to me that means it's going to go after this level, and there's nothing to stop it on the left here when you look at price action. So there's a little bit about the thought process and why I'm taking certain trades, and you know what where my mental stops are, and you know when I would get out of something. So this is a cool little technique if you're trying to gauge on like a continuation, is the price worth it or not. That 78.6 is a good level to get out if it hits that level. Usually, if there's going to be a retracement, if it's a strong trend, it'll go to 38.2. Sometimes it even just bounces off 23.6, but the reward to risk isn't very good on these. 50, even more so. 61.8 doesn't get hit too often, but when it gets hit, it's a very nice move. Once this thing gets hit on the very short term, so if we're looking at like a little bounce, like right here, this bounce down to 78.6 to test the low, that's the only time where I would say 78.6 is good, but it's not very reliable. I think you got to look at least at a minimum of a day. And like I said, on this kind of retrace, if it bounces up to here, it's going to continue. So just thought I would share a few thoughts with you on that one. But let's get in on this trade here, and we will see if we can make some profit. So we went short at the 50 level. Let me just double check and see exactly where I got in. So I want to be 50.6. Okay, so we got in at 170.56. Stop would be if it closes above these highs here. I'm not interested, and I would target the lows here. We'll see where this volume cluster builds up. That's where I would target. So we're looking at an 18-to-1 reward to risk on this. So it could be a very, very solid trade. You're looking at like a 3-pip stop, and keep in mind it's probably going to be more of like a 6 to 7 pip stop, because I measure if it closes above it. So if it just taps it and comes back down, then it's not a valid stop for me. So I'd put my stop up here, maybe a little bit past that 78.6, the hard stop. But if it closes above this level here, I'm not interested. And like I said, we want to target down in this level there. So we'll go to the 30-minute chart, because that's more realistic of kind of what we're looking at. Because a 5-minute close doesn't mean anything, but if it closes above for 30 minutes, then it's definitely something that usually continues on. So here's our trade, and we will post it right now. So thanks, guys, and I'm gonna keep this stream in for a little bit. And if you have any questions, hit me up in the room. Mahalo.